Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I'll look at the Euro, Aussie, Dollar, Yen, Gold and Kiwi. Now, firstly, Euro Dollar, as you know, we are still here in very big downtrend, but I am aware of potential limited weakness here. Keep in mind that ECB is still not hawkish, but at some point they will not be able to ignore the current inflation, so I think that they will have to step in with more aggressive hawkish tone, which means that euro dollar afterwards could bottom. So for now I'm still observing here final stages of a wave D that belongs to a very big triangle as shown here on a weekly chart. So I will be looking for a wave D support in the near future and then a wave E rally. Now looking also at another interpretation, which is quite interesting as well for potential bottom once we reach new lows, is this wedge pattern or ending diagonal if you want. So we have, yes, we have lower highs, lower swing lows, but we have this overlap. So this overlap actually suggests that this current or latest price action is not that strong anymore compared to the previous bearish trend. Okay, so in my opinion this usually fits perfectly as an ending diagonal. So if we are correct, then of course volume and momentum could pick up, but back to the bullish side after we reach a new low. Of course, invalidation level for this ending diagonal would be at 105, okay, because wave 5 must not be longer than wave 3. Also, looking at the 4-hour chart here, and why I think that there can be a little bit of more weakness coming. Well, notice that bounce from recent lows here for March levels was only in 3 waves, and then a sharp reversal, broken trend line. So obviously this correction is completed, and when you have a completed correction in 3 waves, this correction should be fully retraced. So I'm looking for a retest of these levels here, okay, and then potential bounce away from these fib levels. Of course, we will have to see an impulsive rise to confirm that low is really in place. Now let's take a look, as we said, on Aussie dollar. Now Aussie dollar is also turning very nicely to the downside. Before we go to the wave count, I really want to look and show you this intermarket analysis, where I'm looking at Aussie comparing to copper and Chinese versus the US dollar. Okay, so you can see that actually Chinese, US dollar, copper and Aussie, these are all in positive correlation. But notice that here back at the end of March, when Aussie was actually seeing a push to a new high and even spiked much higher after RBA, well, we have seen a reversal lower later because there was no follow through of or confirmation of this Aussie strength from copper or Chinese yuan. So you can still see that peaks from early of March, well, on copper and Chinese yuan are still in place. So now what happened? Well, these markets, in my opinion, could see a little bit of more weakness, copper as well. And if that would be the case, then of course even Aussie, as you know, should see more weakness. So looking at the wave count on Aussie here, now firstly, here's daily picture. I'm still thinking that we could see a little bit of more weakness after this failure attempt of a break above this wave X resistance. So I'm looking for a temporary top now. Why? Well, notice that there is a very strong reversal from the highs. Looks like an impulse. So even if that would be just a temporary weakness, well, I still think it should unfold in 3 waves. So watch out for potential continuation down in the near future, even back towards this lower trendline support, maybe even for a breakout. Okay, of course, watch out for rallies. They will most likely occur. The first resistance is at the previous wave 4 swing low, so that comes in around 74.80, and then you have higher and stronger resistance at 75.40. Okay, now let's take a look also on, we said, on dollar yen. Now dollar yen is very bullish. Okay, keep in mind that we are seeing pair moving here towards this 2015 high, so maybe there will be some very strong resistance going on, meaning that there can be some pullbacks. After all, there was a very sharp recovery recently, so definitely we favor some short-term pullbacks before this market continues even higher. Now, looking at daily chart here, well, notice that I can count even 5 waves up from here in this fifth wave. Okay, so these 5 waves up suggest that we could be running here in late stages of this recovery. So definitely it's not a good thing to chase this market here on the bullish side. Of course, for bears also, I do not recommend any kind of shorts, especially because we are not seeing any evidences of a top. However, maybe this will change by the end of the week. We can see prices trading very nicely higher. Potentially we are seeing prices in final stages here of this wave 5. So if we will see this this broken trend line of this channel, then fifth wave could already be in place. Okay, so very nice resistance for now is still around 127 up to 128, but keep in mind that we also have here a divergence on the RSI, so we are seeing a new high, but but on the MACD we are not getting this confirmation. Okay, so watch out for potential reversal or at least limited upside, because even if we will see just a temporary slowdown, keep in mind after every 5 waves market will try to make some pullbacks. Even here you can see 5 waves up and then was a pullback. So another thing, we now have a higher degree, 5 waves up, and again there can be a pullback coming. Now let's take a look also, we set on gold. Now gold, in my opinion, is still stuck in a very big range that is in play since 2020, and what I'm seeing is potential triangle here in the making for a wave 4. It can be even a flat formation, but in either case, in the short term, I think that there is very similar picture, because we have these 3 waves down for a wave A, and then you have 3 waves up for a wave B. And even if it's a triangle, there will be a limited weakness, but still current wave C should be made by 3 waves. If will be a flat, then of course this will be a 5 wave drop rather than a 3 wave drop. But in either case, you can see that the third leg of decline can still be coming. Now looking at the 4-hour chart, well, we have a very nice strong reversal from the highs when everyone thought that since we broke above 2000 that we are going towards 3000. Well, if something is overcrowded, the opposite reaction will happen. So I still think that there must be some massive liquidations of longs before this market will be able to continue higher. Unfortunately, this is how it works, especially from psychological perspective. So what I'm looking at now, well, we have 5 waves down, and after 5 waves you get a 3-wave pullback, ideally back to the area of a former wave 4. And the 38.2% is the minimum FIB objective that I want to see whenever I could be looking for potential new resumption to the downside, like in our case. So first resistance has been met here at 1966. However, 2000 is the next very important level. So we either stop here or a little bit higher. In both cases, I would be expecting a weakness for a wave C lower. Okay, and now finally, let's take a look on New Zealand dollar. Now, New Zealand dollar is also turning very nicely to the downside. We have been looking for this reversal. Now, firstly, on a daily chart, you can still see that the price was not been able to break this upper trend line. Actually, we failed here, and we are turning sharply to the downside. And this reversal came out of this wedge pattern. Okay, you have a very strong breakdown here, even not only below the trend line support, also sharp move has been made through wave 4 support level. So that's the first leg, either wave A, maybe even wave 1. So more weakness should occur after wave B or wave 2 to rally. You also have a divergence here before this market really came to the downside. So I would be expecting more weakness. Well, the first resistance is here at 68.76, and the next one should be around 69 level, around there. Okay, so as long as we are trading below these recent highs, I think that New Zealand dollar could see more weakness. Traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.